First of all, thanks so much to our clients and friends for your trust and confidence during this very difficult time in the market. And a special thanks and gratitude for all those healthcare providers and folks on the front line that are serving you and serving me and serving us during this time. And some of those are you in your family. So a special heartfelt thanks to you as well. Well, we've seen some significant market turbulence over the last couple of months. We've seen a health crisis with an uncertain outcome. We've seen an economic downturn that was marked by business closures and folks being unemployed or on furlough. So as an investor, what do you do now? Well, whether you're a client of our firm, Paul R. Reed Financial Group, or a client of another advisory firm or working this on your own, we believe there are three crucial questions that you want to consider asking yourself that can give you some insight on what you might consider at this point. Now, let's consider this a self-test. And these are questions that have more to do with your goals than the markets themselves, because that actually is more relevant right now. So let's go ahead and begin and start with our self-test. First question, was your investment portfolio designed around a plan that accurately reflected your goals and objectives? So let's explore that. Your goals and objectives, that would be your time horizon, your income need and liquidity need, your return objective, and risk temperament. As an example, if you're 10 to 20 years before retirement, you have and it's retirement dollars, you have a longer time horizon, you likely have a higher return objective because you want to get more return to compound over time. You don't have an income or liquidity need with your portfolio, and hopefully your risk temperament is consistent with your return objectives. You see how that fits together. Now, if you're 3 to 5 years from retirement, as an example, you're closer to the time you might want to use your funds. You want to build a bit more protection. Time horizon is a little bit shorter, still long term, and your income need is now a little bit closer. So you'd want to adjust your portfolio accordingly. And it says you're willing to assume less risk in exchange for lower return because you're more on track with where you want to go. And finally, if you're in retirement. If you're in retirement, you really have twin objectives. First objective is you want to guard against principal erosion, so principal protection. And the second objective, because you still have a relatively long retirement, 25 to 30 years, hopefully or more, you still have an objective of inflation protection. Now, if you're clients of our firm and you may have gone through this exercise with another advisor as well, but what you want to do is accurately have a plan in place that reflects several variables. So what we've done, as you might remember, when you're nearing retirement, we looked at when can you retire, how much can you spend, how long will your money last, and what return we need to make all that happen. You see, you don't want to take any more risks than you have to at that point in time. And then we also looked at a risk temperament exercise or analysis of 10 questions. And really what we want to do is make sure that your return objective and your risk temperament were in alignment. And that helped develop your portfolio. So let's go to that question and go to the answer. So if you have a portfolio that was developed in accordance with your objectives, then the answer is yes. Great. You're going to move on to question 2. So let's assume, though, the answer is no. Perhaps you don't have a portfolio that was developed with that in mind, or you have more disconnected pieces. Then the direction for you would be use this as a springboard to meet with your advisor if you have an advisor you're working with, or you might want to use some of the online tools that are out there. But just consider readdressing your goals and objectives and adjusting your portfolio accordingly. Now, let's go on to question 2. Question 2 is very simple, very straightforward. Question 2 simply says, have your objectives remained the same? So, in other words, your portfolio was developed at a certain time in life. You've progressed. Perhaps it was further from retirement. Now you're closer to retirement. You may have adjusted your portfolio accordingly or may not. But ideally, all along the way, you are making adjustments so your portfolio is consistent with your objectives, reflecting the variables I spoke about. And these kinds of times, like this time in the market, really heightens the need to do that. What I'm going to suggest to you is that in looking at have your objectives remain the same, the biggest area that we see as advisors that's changed for folks is a risk temperament. You see, if you've gone through a planning process, then there's likely a questionnaire or a process you've gone through to assess your risk tolerance. It may have come up with a number score or a certain portfolio that might have been appropriate for you. Well, I'm going to suggest that the risk temperament questionnaires are good. They help give us a data point, but it's just a point in time. So in other words, if you went through that same questionnaire in 2019, for example, when the markets did really well, you'd answer them a certain way. And let's assume you went through that same questionnaire now in 2020. I might suggest the answers may be different. That's in hindsight. But let me talk to you about another more anecdotal way of looking at risk. And we're just going to call this, we're going to call it the sleep at night test. And there's also a parallel to that too, which I'll talk about. The sleep at night test is just simply this. And by the way, this is literal. It just simply says, very simple question. If you have a hard time getting to sleep at night, or if you find yourself waking up at night thinking about your finances or the market, then it says you've probably pushed your risk temperament and it may be time to adjust your objectives, look at your objectives and potentially adjust your portfolio. Because see, we could go down from this point as well. Now the other test, also anecdotal, we're just going to call it the focus test. And the focus test is just this. It says, as you move through the day with your day-to-day activities, do you find yourself losing focus on your daily activities and focusing more on your investments, the market, or the Dow Jones average? And then a parallel to that is the mood during the day dictated by what the market average is doing that day or the prior day? You see, if that's where you're at, then it says you probably haven't yet quite pushed your risk temperament, but you're getting really close. So think about those two tests. Now let's answer the question. So number one, we answered. Number two, have your objectives remained the same? If the answer is yes, that's great. Now, doesn't mean you're not concerned, by the way. You certainly can be concerned, but we're talking about objectives, keeping emotions kind of out of it for a moment. So if your objectives have remained the same, great, we got two yeses. And if they've changed, in other words, if the answer is no, my objectives haven't remained the same, then once again, it says to revisit your objectives and your portfolio, potentially adjust that to be more consistent with your objectives. Well, let's move on to question three. Question three is a really all-important question. It's a key question for anybody at this point, no matter how you've answered the questions, actually. Very important question. And it just acknowledges that we're going through this very, very challenging health crisis, combined with an economic downturn with an uncertain duration. But the question is this. It just says, do you believe in the resilience and strength of our economy and market, such that we will recover in time, just as we have in the past? So I'm going to repeat that question. Do you believe in the resilience and strength of our market and the economy, such that it will recover as it has in the past? You see, from our perspective, we certainly believe that this time is different. Just as there have been differences in previous downturns and recessions. I think back on Y2K in the year 2000. Difficult time, unique time. Many folks doubted if we'd recover from that, by the way. Then I think about 9/11 in 2001, that dramatic situation. And again, there were concerns that we'd recover. We did recover higher, just as we did in 2000, after 2001. And then there was 2007 and 8. It's called the Great Recession. And there was concerns that we wouldn't return to any kind of normalcy. Well, in each case, we did recover and we reached new highs. You see, we have confidence. Our belief is that we will recover. I have confidence that we'll recover from this in time and that we will reach higher highs. So the question for you, And I'm going to pause here. The question for you, think about it clearly, is do you believe that our market will recover in time as it has in the past? You see, if the answer is yes, once again, then it says you've got yes for question 2, yes for question 1, yes for question 2, yes for question 3. And my action item and advice for you is you're likely still on track to achieve your goals. We should maintain our positions, and I'd suggest that you take a rest easy, don't worry, and sleep well. Now, if your answer is no to any of those questions, my action item to you would be to, as we said, revisit your objectives, think through a planning process. If you need advice, seek the help of a financial advisor, and really adjust your portfolio accordingly or adjust your expectations. So hopefully this has been helpful in looking at that. What I'd suggest to you is if there's any concern, once again, seek assistance. This is meant to be educational for your information and awareness. Well, as we wrap up, I want a special message to our clients and friends. I want to remind you all of a couple of things. First of all, just about the market. We're going through difficult times. It's our belief that the markets will likely continue to be driven by fear and uncertainty over the coming weeks and possibly longer. Expect that, and don't be anxious, be prepared, but expect it. Second of all, as always, we're monitoring your portfolios, monitoring the markets, and we will make adjustments accordingly as conditions change, consistent with your investment policy statement. If there's any changes in your objectives, please reach out to us and we'll address those and fold those in accordingly. Third, remember you've gone through what we call the peak process. And that peak process stands for planning, education, advice, and consulting. See, you've got a plan in place that was built around your unique objectives for retirement or pre-retirement, your income, return objectives, time horizon, and risk temperament. And that's in place. And education. Education certainly on what options we should take in the planning process, but also education about how markets move. You might recall we talked about different elements of a diversified investment plan, different elements that respond differently in different economic conditions. We have those built into your portfolio. And advice. Every 6 months we meet on the average to really provide a perspective on planning, provide some performance reports, and also address any changes in your objectives and make adjustments in your portfolio appropriately. And then it's ongoing consulting. You can reach out to us at any time as your financial team. We're honored to serve you, and whether it's between our means or otherwise. And then as I think about that in the grand scheme of things, what we're going through right now is difficult. But in the grand scheme of things, it's relatively short because, see, your portfolio is designed for a much longer period of time, generally over several market cycles. And then, finally, to you, our clients and friends, know that you've got an all-weather portfolio that was carefully designed based on our 3 decades of experience around your unique objectives, the research that we've done, and historical patterns. While we couldn't have predicted that this pandemic would have caused the market downturn it did, we do know that it was not a matter of if the market goes down, it was really a matter of when. And we planned for it in the process that we used to develop your particular portfolio. Well, no one has a crystal ball, certainly. We're confident we're going to go through this and go through it successfully. We're with you every step of the way. And once again, we're honored to serve you, and we thank you for your continued confidence over this time and over the years. Please reach out to us by phone, email. We're going to continue to do video conferences. If there's any questions whatsoever, we're here to serve you. We're with you every step of the way. Well, it's been my pleasure in talking with you. Take care, God bless and have a good day.